Ladies and gentlemen, good day and welcome to Nurturewell Industries Limited Q3 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Janvi Patil from Orient Connect. Thank you, and over to you, Ms. Patil.
Good afternoon, everyone, and a warm welcome to all of you. I'm Janvi Patil from Orient Connect, representing the investor relations team of Nurturewell Industries Limited. On behalf of the company, I would like to thank you all for joining us for the Q3 FY26 earnings call. Before we begin, I would like to state a brief cautionary statement. Some of the statements made during today's call may be forward-looking in nature. These forward-looking statements are subject to certain risks and uncertainties that will cause actual results to differ materially from those expressed or implied. These statements are based on management's current expectations, assumptions, and information available as of now. Investors are therefore advised not to place any undue reliance on these forward-looking statements when making any investment decisions. The purpose of this call is to share insights into the company's business, performance, and financial results under review. Now I am pleased to introduce the members of the management team present with us today. Mr. Sanidhya Garg, Executive Director, Mr. Vikas Tandon, Group CFO. With that, now I hand over to Mr. Sanidhya for his opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us today. I would like to begin by expressing our sincere gratitude to our shareholders, investors, customers, partners, and employees for the trust and confidence they have placed in the company. We are pleased to share that the company has delivered a strong performance during the quarter and 9 months ended December 31st, 2025. Starting with Q3 FY26, revenue from operations stood at 289.77 crores compared to 198.75 crores in Q3 FY25, reflecting a growth of 45.80% year-on-year EBITDA. For the quarter was 33.19 crore, up by 93.80%, with margins improving to 11.45% from 8.65%. The net profit came in at 34.60 crores, registering a growth of 95.04%, and net profit margin improved to 10.72%. Diluted EPS for the quarter stood at 1.19 rupees. For the 9 months ended FY26, revenue from operations reached 826.48 crores, a growth of 57.28% year-on-year. EBITDA stood at 89.38 crores with margin at 10.81%, while net profit rose to 92.32 crores, up by 104.20%. The diluted EPS for 9 months FY26 stood at 3.15 rupees. This performance has been supported by expansion into high demand categories and strengthening of our product mix. During the period, we added donuts in our premium and mass segments, introduced rusk, and launched khari biscuits, products with strong repeat consumption and retailer traction. We have also entered the fresh bakery segment with kulcha and are rolling out bread and puff variants. This expands our presence in the fast-moving fresh food space and enhances opportunities across both retail and institutional channels. Overall, the focus remains on expanding our product basket, improving margins, strengthening distribution, and maintaining disciplined execution. We believe the current momentum positions us well for the coming quarters. Now, the business and operation updates are: the Neemrana facility continues to operate efficiently with a capacity of 3,400 metric tons per month, supporting both domestic and export demand. We continue to strengthen our distribution footprint across North India with 150 plus distribution partners. Our brand portfolio includes 3 brands, Richlight, Puntreat, and Crunchy Craze, that continues to gain traction in both traditional and modern trade. Export presence now spans 9 plus countries across Africa and Middle East, strengthening our international positioning. New product introductions in premium bakery, cookies, and biscuit categories are receiving encouraging market response. Thank you.
Speakers, shall we open the line for questions?
Yes, we can.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on a touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Snehadeep Aich, an individual investor. Please go ahead.
Am I audible?
Yes, you are audible.
Congratulations for good set of numbers. So I just want to ask that in next 1 to 2 years, are you targeting any newer geographies, means in domestic area?
Yes, we are. We are trying to expand into the UP market, which is a really big market. Plus, we are also looking at MP and Bombay as well.
So any plan to expand in eastern part of India?
Sorry?
Any plan to expand in eastern part of India, means West Bengal or?
No, not as of right now.
Okay. And you are opening a new manufacturing plant in UP. So what is the current update of that plant?
See, the workings are under process as regard to the product portfolio that we are, starting with this new unit. That is one. And secondly, we
have ordered for the quotation for the machinery as well. That is also in the lineup. Plus, we are also scattering our product mix that we are going to launch over there.
Okay. Thank you.
Yeah, so it's all in the process only.
Okay. That was from my side. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Sushant Quatra, an individual investor. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, you are.
So, first of all, congratulations for a good set of numbers.
Thank
there are very few FMCG companies, and probably you're a small in a small cap category which is doing such good. So again, congratulations. So first question is, sir, in continuation to the previous individual investor was regarding the capacity expansion. So when can we expect the commencement of the same, number one? Number two, in India, like the business in India versus like the exports, what is the percentage? And just one thing, it seems that India business is very smaller part of the overall revenue, whereas there's a huge opportunity in India. So can you throw some light, like how can we push the India sales? Is there any plan, or you can throw some knowledge on this? It will really help. Thank you, sir.
Okay. Starting with your first question, the commercial operation from the new unit is expected to start from 18 to 24 months from now on. So technically, we are expecting the revenues to commence from the new unit in financial year 28 to 29, roughly. That is one part. Second is that the overseas businesses include the contract manufacturing, which we are getting it done through Malaysia and catering to the Middle East and other African countries directly from there. And the overall contribution of the overseas manufacturing is approximately close to 80% roughly, and the rest 20% is coming from the Indian manufacturing unit. And as regard to the expansion of the domestic contribution to the total sale, yes, we are in line with that. And that's why the new unit is also expected to increase the domestic contribution to at least 50 to 60% of the overall turnover in next 2 to 3 years. And further, we are expanding the current manufacturing facilities by adding 2 to 3 lines in the financial year 26-27. So that will add up to the manufacturing capacities to generate higher sales from the existing setup in India. So further, we are also targeting some manufacturers which will be manufacturing our products on contract manufacturing, which are located in the western area where we are targeting now. So they will be manufacturing based on the recipes that we are into. So we can cater to those customers or the target customers in these areas also to boost the turnover in the Indian market as well.
Got it, sir. That answered very well. Just one thing. So FY26 last quarter and FY27. So where can we see the growth? Like just a percentages, if we can, like if any numbers you can give, probably the revenue guidance, probably if possible.
Yeah. See, the last time when we had a investor call, we had given a guidance for approximately 1,000 crore for this financial year. So till 31st December, we have already crossed 825 crore of the top line, vis-a-vis 766 crore top line in last year. So there is a jump of 7.70% overall till 31st December. So given the good numbers we are expected in quarter 4 of FY26, so we are expecting our total top line will be roughly close to 1,150 crore roughly. So that will be approximately a jump of approximate 50% to the last year turnover. So things are looking very good, and we will be generating a good top line for next quarter as well.
Great, sir. Just two statements from my side. One is now market has started giving valuation to integrated industry. That is very good, which I have seen which was long awaited because of the margins which we are doing and the revenue, like we are meeting the revenue numbers. And best of luck, sir, to you and your team doing the great job in future. Thank you, sir.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes on the line of Ritik with Motilal Oswal Financial Services Limited. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on great set of numbers. So my question was that, so basically, the Indian, I'm seeing the revenue for India. The revenue has declined over Y and Y for the Indian business. So what was the reason behind that? Are we not focusing on the Indian business?
No. I think you have some incorrect figures. The domestic revenue is also increasing.
So I'm checking from the financials only.
Yeah, but no, there is an increase in the domestic revenue also, and precisely if I see the last year, the domestic turnover was approximately 35 to 40 crore and on a quarter basis, and the similar line, at least 10% jump is there in the domestic revenue also as well in this quarter.
So, sir, I'm seeing that for the December 24 quarter, we were generating revenue of 41 crores, and now it's 34 crores.
No, this quarter 41, last quarter 34 to 35.
Okay, sir. So, what is the volume growth for the company?
So, in terms of volume growth, yes. In terms of tonnage, there is a similar growth in line with the tonnage also. That is approximately 7 to 8% growth in the tonnage as well.
Okay. And how much is our portfolio premiumized? Basically, what is the percentage of the portfolio which is premium portfolio of the company?
In terms of premium means what? The category of the product.
Yes, in category of product.
See, we are into biscuit segment, which we are catering to tier 2 and tier 3 cities. So, which are the basic premium basic cookies like cream biscuits, jeera biscuits, and the other kind of biscuits, so which under the brand name Rich Light. So major contribution is coming from these segment only, and the primary objective of setting up the second unit is to expanding our premium product range, which is presently limited in terms of numbers to the total turnover. So this new unit is expected to enable us to get into the premium segment of cookies as well. So as of now, we are into tier 2, tier 3 cities with the core biscuit lines.
Okay, understood. And so one last question is that majority of the revenue is from overseas, and which is the biggest country in the overseas which we are supplying to?
It's basically the African countries.
Sorry?
African territory is the major contributor to the total top line of the overseas business.
And what will the figure would be?
Sorry?
What will be the percentage of African to the total revenue?
See, African countries, we are catering to approximately 12 to 13 countries there, and their total contribution is roughly close to 77 to 80%. Rest 20%, 25% is coming from the GCC.
Understood. Thank you, sir. I'll come back in the queue with further questions.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Sonia Keshwani with Coheron Wealth. Please go ahead.
Hello.
Yeah.
Yeah. Hi. Thanks for the opportunity. I had a couple of questions. So, firstly, on the plant that we have in Rajasthan, in Nirmana, what is the capacity utilization there?
3,600 tons per month.
That is the actual capacity that is there, and we are utilizing approximately 65 to 70% as of now.
2,000 tons.
65 to 70%. Okay.
Yeah.
And if I see the new Sikandarabad plant that was scheduled to be operational by October 2026, can you please help me understand why? Because I think to the previous participant, you said that it will take another 2 years for the plant to start operations. What has been the reason for this delay?
See, the land has already been acquired, and the internal working as regard to the production line, setting up of the line, interior, then that is already under process. So there are certain building approval plan that is pending. So for that, one thing, unless we receive that, we cannot start the erection work. So we are very much in line with that. I think we will be able to complete the entire setup by another roughly 12 to 15 months. So we will catch up with the production soon.
Okay. And yeah, and on the trading business, as I understand, I think whatever products that we are selling in the overseas market, 100% of that is contract manufactured by other third-party manufacturers.
Yeah. Correct.
So, and once we get it manufactured, are we selling these products under our own brand, or is it a white label product?
No. This is entirely under our own brand name. We deliver the recipes. We give the packaging. They manufacture as per our requirements under our own brand name, Richlight, and the packaging is done in such a way that our brand name is also there on that. So we are doing 100% under our own brand.
Got it. So just to understand how many when I was going through the RHP, I saw that in the overseas business and the trading, which is the trading business, 75% of the total revenue is coming from one single customer, if I see FY25. So can you help me understand why is that so, and what are the steps we are taking to diversify our client base?
See, basically, how our business model is set up now, you have to understand that we are doing through the consolidators and super stockists located in UAE and other Middle East countries. So they have onward cater to the African market, so that we don't need to worry about the realization. So that is the business model which is being deployed by the other industry players also. So we operate through the consolidators. So these consolidators normally take chunk of the production or the inventory, and then they cater to the various the customers which are located in African and other GCC countries. So that's why you see the consolidation at the customer consolidation at one level. But ultimately, the number of customers that are catering through these consolidators are big in numbers.
So basically, you're telling me that when you say that 75% is coming from one particular customer, that is our stockist in the overseas market.
Correct.
So how many stockists do we have in the overseas market? How many are we on board?
We presently have approximately 18 super stockists, consolidators.
And how much is that one single customer contributing to revenues for 9 months, FY26?
I think it will be approximately two to three super stockists, and rest is widely distributed between them.
2 to 3 are contributing 75%.
No, not 70%, 50 to 55%. This year.
5%. Okay, got it. And yeah, your tax rates have been really low. Can you help me understand why?
Yeah, because the overseas business is tax exempted because of the loan or offshore income for that particular country. So that's why there's no tax on that income, and we are paying taxes only corresponding to the Indian income. So that is why the taxation level in terms of amount as well as the percentage is low.
So basically, as I understand, I mean, I think going ahead, our focus will be more on building our Indian business, and our the products that we sell will come more from our manufacturing piece, so which will also increase our tax rate.
Yeah, the moment the Indian contribution is expected to grow, the taxation will increase. But again, the overall contribution to the total profits is also expected to grow because of the increased profits we are expecting from the premium segment, which will be captured from the new unit. So somehow the taxation will not have major impact because the overall contribution to the total profits are also going to go up.
So what would be the change in margin profile as soon as our manufacturing piece picks up?
See, presently the gross margin that we have in the Indian market is approximately 10 to 12%, 13%, and with the new setup coming up, it will go almost double. It will go up to 25 to 30% because of the premium nature of the segment that we are going to enter into. So that's why I'm telling you that the profits are going to grow.
Understood. And so last question, just to understand, I wanted to understand the history of the management who's handling the business. I just want to understand the rationale and what has been the management's view for entering an industry which is already so crowded.
See, the management is already a very experienced management. They were previously they started with the steel industry and they have been doing very well there also. And thereafter in 2023 they started with the setting up of the unit for the biscuit manufacturing, and there also they have been doing very well. So apart from that, they have interest in the telecom sector also. They are doing extremely well also. So that's why the telecom. Telecom, yeah. Okay. And therefore they are handling the wide industry gamut, I would say. And the results itself shows that the overall leadership has been extremely well, as you can see from the number as well. So going forward, the same trend is expected to go, and we will be delivering much better and higher numbers in coming time.
Understood. Okay, sir. Thank you so much for answering my questions.
Thank you.
Thank you. Next question comes from the line of Onkar Gugarde with Sri Investments. Please go ahead.
Hello, congrats on the good set of numbers. I'm new in tracking this company, so just wanted to know your broad long-term vision with this company. Like, what kind of sales you are targeting in next 3 years? Like, what kind of profit margin you will be working on, and capacity expansion, and what kind of asset turns you can do on that? Couple of basic questions, please.
See, as you can see from the present number also, the numbers have grown up. And for next, in terms of the capacity, as already said that we are coming up with a new unit where we will be increasing our capacity. Further, the existing unit will have the additions in the line. So again, the capacity of the existing unit will also go up. So coming up with the total number, so we are expecting roughly targeting to 2,500 crores once the second unit is operational. So 2,500 crore is the target for FY2029 total business. And in terms of the numbers, so with the second unit having the better margin, so we are expecting the margins to grow from 10% to approximately 15% in next 2 to 3 years.
These are PAT margins you are talking about?
EBITDA margin that I'm talking.
EBITDA margin, 10 to 15, from 10 it will be rising to 15%.
Correct.
Okay, and like this 2,500 crore revenue, you said with current capacity operating at 100% and the new one also operating at 100%?
No. The current capacity is expected to operate at 80 to 85%, and the new capacity also in line with that, 80 to 85%.
So total capacity operating at 85% will give you a revenue of 2,500 crore in FY29.
No, you have to distinction between the overseas business and the Indian business. So I'm talking about the Indian business. So Indian business is expected to contribute roughly close to 1,200 to 1,300 crores in the overall 2,500 crore business. So that capacity which I'm talking about is pertaining to 1,200 to 1,300 crore business from the domestic market.
The second capacity, right?
Yeah, including that.
Okay, both the capacities including.
Yes.
So that will contribute around 12 to 13, so around half of the revenue, right?
Yeah.
And the overseas will contribute the other 50% approximately.
That will be the overseas business, yes.
Okay, so you ended FY25 with around 750 crores of revenue. So FY26 mostly you will be ending around say 1,200 crores. So around, I guess that will be the number, right? And from 3 years from FY26 you are targeting 2,500, right?
Yes.
Okay, and what are the asset turns generally in this business?
What are the
asset turnover ratio?
See, asset turnover is depending on the assets that we do. Going forward, we are expecting a roughly addition of approximately 350 crore, and 100 crore of the capex already done in till now. So we will have approximately close to 400 to 450 crore of the capex. So with that 1,500 crore turnover, it will be approximately 3 to 3.5 times of the gross block.
Okay, so basically what I wanted to understand is 3 years from FY26 you are targeting to double the revenues. Is my understanding correct?
Sorry?
So once you end FY26 with around upwards of 1,100, 1,200 crores revenue, so from there you are roughly targeting to double the revenue in next 3 years, right?
Yeah,
FY25.
Because capacities are there to support. No?
Okay, so and margins will increase from current 10% to 15%, right?
Yes.
The overall margins.
Yeah.
This you are not talking about India specific or the international market specific, right? You are talking as a whole.
No, I'm talking about overall margins.
Okay, the company margins will move from 10% to 15%, right?
Yeah.
Okay, and what about the ROE and ROC numbers, what you are targeting? And currently, what is the figure?
ROE number going forward for, let's say, once this capacity expansion is done, so we are targeting approximately 24 to 25% going forward. And for this till date is, I think I need to check the figure in terms of ROE. 1 minute. I think presently we are 15 to 18% roughly. I think we are at ROE level.
Currently, you are 15 to 18%.
Yeah.
Okay, and this capacity addition which you are saying, you will start this from what year?
We will start from by the end of FY27. The trial runs will be done, but yes, for entire 12 months will be at 28.9.
Okay, but you will start. It will start contributing from say April of 27, right? Is that correct?
28.
Okay, FY27, 28.
We will start the trial runs in last quarter of FY28, but I think the overall commercial production will start from March or April. That depends on how quickly the trial run we are able to do so.
So 2 years from now, more 1.5 years from now.
Correct.
Okay, and current capacity is 60%. So how quickly you can ramp it up to 80 to 85% till the next capacity comes up?
See, the order book is there with us, so that will help us to increase the capacity utilization and translate into sales. So that's why we don't see any problem as to the increase in the capacity utilization. We are adequately placed with the orders as well as the working capital. So increasing the capacity utilization is not an issue for us.
Thank you. Mr. Onkar, please rejoin the queue for more questions. Next question comes from the line of Saurav Khara with VT Capital Market Private Limited. Please go ahead.
Hello.
Hello.
Hello. Can you hear me?
Yeah, you are.
Yeah. So what type of new products we are going to launch? Suppose we have launched this quarter Kulcha.
Sorry, can you repeat?
I'm telling what type of new products we are going to launch in coming quarters.
See, we are planning. There are a lot of things going on, but we are shortlisting it right now. But we have started doing rest, the khari biscuits, muffins, donuts, and we are also entering into confectionery business now. So we are planning noodles as well, some cornflakes, chocolates, breads, puff. Like there is a lot of variety, and we are shortlisting it and making it more clear now. But there will be a lot of products more into confectionery and baking products.
Okay, sir. So then means noodles and these are in process, not launched yet.
Sorry?
Noodles and chocolates are in the process.
Yeah, it's in the process. We have started the trial runs, but some of the things are going in the market for the review.
Samples have been given to the market, and we have got the successful the response from the market. So now we are officially launching it in next 1 month or 2 months.
Okay, sir. So what is our current working capital cycle, sir? In 9 months?
It is 65 to 90 days approximate.
65 to 90 days. And any debt?
So we don't have a debt, but apart from the working capital limit that we have from the bank, otherwise there is in terms of long-term debt, there is no such debt.
Okay. Thank you, sir.
Yes.
Thank you. Next question comes from the line of Rudraksh Raheja with iThought Financial Consulting. Please go ahead.
Yeah, thank you for the opportunity, sir. So you were explaining that the domestic business, which is as of now around 100 crores, or let's say we end the year around 120, 130 crores this year. This has the potential to reach 1,100 crores in next 3 years. And that this is mostly the would be done by our own manufacturing setup. But the new plant that you are saying that will come online in the next 2 years. So I wanted to understand how we will able be to ramp this business up when our plant is coming to come online after 2-3 years.
See, presently the domestic, as you rightly said, the domestic segment is contributing approximately 100 crore to the total turnover till 31st December. And with the existing capacity at 65% utilized, so we are increasing the capacity this year for the domestic unit. So we are expecting for next financial year, the domestic contribution is going to increase from 125 to 30 to approximately 250 crores. 225 to 230 crores. Thereby, we are adding some contract manufacturers also. So they will be manufacturing the goods as per our requirements under our own brand till the time our capacities come into operation. So that's the plan to increase the turnover once the new unit comes into operation. So that will replace the contract manufacturer, and we will be manufacturing under our own brand. So by the time the new unit comes in, we will have the customer base set up for the higher turnovers.
Understood. So what you are saying that you have already got a lot of orders on hand. Is that the right way to look at it?
Yeah, yes.
And sir, could you explain more on this order book concept? How does it work in our domestic business? Like how in advance we get our orders, and some more details would help.
We operate through super stockists and the consolidators. So they are present in the tier 2 and tier 3 cities in northern India. So they are the ones who are working at the ground level with the various retailers and the people who are providing us the space for selling our product. So the distribution point that we have, we get the feedback from them through the super stockists and consolidators, Based on that, super stockists and consolidators develop their own requirement for next, let's say, 3 months, 4 months, depending on the variety of the business that they are getting the better feedback from the market vis-a-vis the other competitors with us. So then they give us the long-term orders so that we can provide them the additional quantities with them so that they can cater to the increased requirement that they are able to get from the market. So that is the reason that why we are very much confident on the turnover turnover part, because these consolidators have been given higher orders in terms of the varieties as well as the geographical areas that they are also catering to. So based on that, we have sizable order book, and that's how the order book is being developed over the last 1 year. Further, the new super stockists are added depending on the geographical they are located in. So these new super stockists also place the order with us.
Got it, sir. Sir, which would be the key states that are contributing to our domestic revenues as of now and their
That will be
percentage share?
what? Can you explain it again?
The key states that are contributing to our domestic revenues.
State.
Yeah, top states, yeah.
Punjab, Rajasthan, Haryana, UP, J&K.
And what would be the percentage share of top 3 states?
Top 3 will be contributing approximately 40 to 45%.
Got it, sir. Got it. And sir, I'm deviating a bit from this line of questions. I wanted to understand, like, you are first of all expanding on your Neemrana plant, adding some lines there. Then there is another capex of another plant. So could you quantify all of that? How much would be that in quantum, piece by piece?
In terms of what?
Yeah. So how much money we are going to spend on expanding the Neemrana plant? First question is that.
The existing plant, the overall the addition in the line will take approximately 15 to 20 odd crores. That is there that is already there in the company. So, and for the new unit, we are considering a capex of approximately 400 crores, wherein 300 odd crores will be going towards the capex, and just 100 crores will go towards the working capital. So that is the overall capex number that we have identified for next 2 years.
And so do we plan to raise any debt to finance any of this?
No, there will not be any debt, yes, but it will be funded entirely through the promoter's contribution, some internal accrual, as rest will be through the capital markets.
Capital markets. So we'll be raising more equity to finance this.
Correct.
And sir, when do we plan
alongside
to do
promoter's contribution also.
Yeah, and when do we plan to do this?
We are working on that line. The numbers are being finalized, so we are expecting it will start from June or July onward, 2026.
Understood, sir. Understood. I'll come back in the queue for more if I have more questions. Thank you, sir.
Thank you.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. The next question comes from the line of Shantanu Talukdar with an individual investor. Please go ahead.
Hello.
Yeah.
I am audible?
Yes, you're audible.
Yes. Yes, my first question is, at 100% capacity utilization, what is the maximum annual revenue the current plant can generate?
That can reach approximately 200 to 225 crore of the turnover.
Okay. My second question is, to reach 2,000 crore of revenue, will existing capacity be enough, or do we need expansion or outsourcing?
Sorry, I did not understand your question. Can you repeat?
Yes, please. To reach 2,000 crore revenue, will existing capacity be enough for us, or do we need for any capex or expansion plan?
It will be both. We are adding 2 to 3 lines in the existing setup, and we are coming with a new unit wherein the capacity will increase. So those two factors will contribute to the higher numbers for next 2 to 3 years.
Okay. Ji, sir, my third question is, what is the exact change in product mix or cost structure will help EBITDA margin move forward to 15%?
Sorry, can you repeat the question again?
What exact changes in product mix or cost structure will help EBITDA margin move forward to 15%?
Yeah, because the new unit will have a premium segment of biscuits like cookies and other confectionery items where the profit margins are higher than the regular biscuit segment. So where we are earning 10%, so there the contribution, because of their higher contribution, the overall EBITDA margins will go up from 10% to approximately 15% in 2 to 3 years.
Okay. And currently, how much of next quarter revenue is already backed by confirmed orders?
That is already backed by approximately we have 75 to 80% of the orders booked for next quarter.
Thank you. Mr. Talukdar, please rejoin the queue for more questions. Next question comes on the line of Ramesh, an individual investor. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah, thank you for the opportunity. See, in Q2, your trade receivables were around 216 crores. So can I know the status of has it come down in this quarter?
See, the receivables are being generated over the normal course of business, and given the credit period that we are offering to these customers, these all are receivable and regular. We have out of this 216, we have realized approximately 175 crore out of it. But again, the sales again for the month of April, for the month of January and February is happening. So our overall debtor level remains at this level only. These are regular business debtor, so nothing is sticky or that thing is there. These are regular debtors, and the payments are coming in the due time.
Right. Thank you.
Thank you. Next question comes from the line of Rangan, an individual investor. Please go ahead.
Good morning. I am very happy with the set of numbers, but the company is not at all contactable, either through mobile or email, anything. That's very bad, actually, on the part. I feel that you should communicate with the shareholders by way of letter or something like that. And I would like also to know about the product, where will I get in Chennai? You will send a sample, pieces of that one, or which I will pay. We are ready to pay. And where will I get in? Because not at all contactable, either through mobile or something like that. It's a very sorry state, actually. Please. And I wish you all the best. You are keeping on increasing capacity. What is the conversion cycle? How many number of days, actually? Then how the backward integration can take place? And that one I would like to know. See, you are having a setup in Dubai only for the purpose of tax, like that. Can you throw some light? Thanks.
I think some voice issue he had, but whatever I could understand, I will try to explain. The email IDs are totally working. Phone number is working, and we are and if we are not being able to contact on that phone number or something, we will definitely look into it. But at least you can drop a mail. The reply will definitely come from our office. That is not an issue. And the rest of your questions, what I could understand is that you said about the capacity. So yes, we are increasing our capacities. And the sample that you are telling, you can drop your details. Right, we will ask the marketing team to reach to you and provide the sample. That is not an issue. I think these are the questions I think that you have.
How many number of days you take for realization?
How many number of days we take for?
Conversion cycle.
Yeah, that is 65 to 90 days approximately, depending on the product. It ranges from 65 to 90 days.
Thank you. Mr. Rangan, please rejoin the queue for more questions. Next question comes from the line of Onkar Gugardare with Shree Investments. Please go ahead.
So I just wanted to know, what kind of seasonality is there in the business? Is there any? Or if not, then how does that business work in 4 quarters?
See, seasonality is not the very much an important factor, because the if I see there can be a seasonality for, let's say, 1 to 2 months max, but otherwise we are catering to the other states also, where the winter or the summer doesn't much impact. So that's why we don't foresee any seasonality. If you see our numbers also, there has been a constant increase on quarter-on-quarter basis. So if you see the 4 quarters also, there has been a jump only. So we don't foresee any the negative impact of seasonality in our company. So we have been doing it very well for last 4 quarters. If you see the numbers, you will get to know what it is.
Okay. Another thing is that you just now mentioned previously to one caller that at peak capacity, 100% utilization, you will be doing around 200 to 250 crores of revenue, right? So total how many clients you have, and total how many how much is the total capacity as of now, and how much you are adding in 2 years?
See, in terms of the existing setup at Neemrana, we are operating at a 65% of the capacity. So given the 100% capacity utilization, we will reach 200 and 225 crore. But in next year, we are planning to add two to three lines in the existing setup. So given the 100% utilization for those capacities also, we can reach up to 300 and 350 crores. Right? There are certain contract manufacturers that we have been also tied up with. So there we can get the manufacturing done to cater to the states which are near to the contract manufacturer, so that we can save on the transportation cost as well. So that is the basic idea of increasing the capacity.
So right now, how much is this contract manufacturers contribute to your overall sales?
As of now, zero.
Yeah.
As of now, zero. We are manufacturing the goods 100% in our own plant.
Okay, but I guess I'm not getting something correct here, or there is some disconnect. So total sales for the last year were 760 crores, right?
Yeah.
And current capacity at full 100% utilization will...
Okay, I understood. See, out of this total 700 crore roughly of the turnover, there are two contributors to it. One is the manufacturing facility in India at Neemrana, Rajasthan. Another is the overseas business, where we are getting the biscuit manufactured through contract manufacturers. Regarding the capacity which I stated was pertaining to the Indian plant. That is 200 crore to 225 crore. That is pertaining to Indian plant. Rest turnover contribution is coming from the overseas segment, which is contract manufacturing of the biscuits. That's how the sales are achieved.
And what is the current capacity utilization in the international plant? And the new capacity will be for the international plant, right?
No. See, international plant, we don't have a capacity. We are getting it manufactured through the contract manufacturers. We don't have a capacity there. So therefore, it is not possible to tell you that what is the capacity present for the overseas segment. Even the new unit that is coming up will be getting to the new customers. It will have its own customer base apart from the overseas customers that we have through our overseas subsidiary.
But that will be serving the Indian market or the overseas market?
Both. Approximately 70% will be Indian and 30% will be exports.
Okay. And what is the difference between the margin in international and Indian market?
See, as of now, in Indian segment, we are generating a margin of 6 to 8%, the overall margin, and the overseas subsidiary is giving us a margin of 10%. So with the new unit with premium segment, the Indian contribution of the margin will go up to roughly 16 to 18%, giving us an overall margin of 15%.
So from 6% to 8% currently, it will be moving from it will go to 16 to 18% for Indian.
Yes, because of the variety of the and the raw material prices will go down as much higher we will purchase. So we can save at the commodity purchasing. Going forward, we will have an additional requirement of palm oil and these things. So we can directly go into imports, which we are presently buying from the various traders in India. So that will add to the cost saving. So which will again reflect into the profit margins as well.
And is there any margin levers for international market to expand margins?
See, we have more or less worked on the cost metrics in terms of overseas operations. So we have been successfully able to not only achieve 10% margin, but also we have been able to sustain that also, which is again a very good margin for a overseas company. So we are expecting an increase from 10% to 11%, 1.5% the cost reduction that is again possible. So that will increase our margin in the overseas market also.
Okay, just last question. Say 2 years from now, what will be the revenue contributions from Indian market and the international market? The revenue mix.
In fact, 2 years now. In fact, I'll give you a guidance for 3 years. That again, by 3 years, we will have approximately 50% of the contribution of Indian as well as the overseas business.
50% from India, 50% overseas, right?
Yeah, correct.
Okay. And just a small question, what is the current promoters' stake in the company, and how much it will be likely to dilute for the capacity expansion you are talking about?
See, the expected capex requirement is going to be funded through the fresh issue of shares as well as through the promoters' contribution. So we will be more or less maintaining that the existing promoters' contribution to the total shareholding of the company.
Which is around right now?
Right now is approximately 54%. We will be keeping that also in line.
Okay, so you will be maintaining that?
Yeah.
Okay, all right. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to Ms. Janvi Patil for closing comments.
Thank you everyone for joining the call today on behalf of Nurture Well Industries Limited. We appreciate your time and participation. For any further queries, please reach out to us at letsconnect@orient.in. Thank you.
Thank you. On behalf of Orient Connect, that concludes this conference. Thank you for joining us. You may now disconnect.